To have the peso inching to its lowest in 16 years amid the dollar, of course, strengthening due to higher interest rates. How low can the local currency go, and until when do you see it weakening?
All right, so I think it's important to point out the fact that our exchange rate is determined by the market. So the Bangko Sentral does not control or determine the peso dollar cross rate, but rather it responds to the market forces. So for example, if more investors are more likely to invest or buy US Treasury bills, for example, because of their higher interest rates, then that will push the demand for US securities over Filipino securities. So with the recent announcement of the Federal Reserve that they're going to hike their interest rates by 75 basis points, that makes US securities more attractive to foreign investors. That's why we're continuing to see that the peso exchange rate is going to go up.
What are your sentiments on the current or the yesterday's pronouncements of Powell, where analysts are basically saying maybe there's going to be a soft landing after these 275 bip hikes and it's not going to be prolonged? Do you see stabilization by the end of the third quarter?
Right, so I think we have to look at the context as well. So remember that during the pandemic, there were already many people who were already calling for interest rate hikes, even in 2020 and even in 2021. But Powell did not push through with these hikes. And that's why right now, the US pushed for a high interest rate hike. And some economists in the United States are even saying that they need to push for a recession to happen because of the inflationary pressures. So right now, the inflation in the United States is at 8.6%, which is much higher than what we have here. That's why we're going to see these interest rate hikes. No, so I think that context is important. That's why, for example, if you contrast this to what the BSP by Governor Jokno and incoming Governor Medalla have been saying, they're going to be more gradual with the interest rate hikes here in the Philippines, because I think they're going by the data as well. They're looking at our inflation figures and they're saying, well, inflation is not as bad as in the United States. It's more stable. We have a better outlook. We're not as affected by the food supply shortages that are happening in Ukraine and Russia, for example. So we're more resilient to that, and we don't have to resort to a one-time large increase of 75 basis points. We can resort to more gradual increases of 25 basis points at a time.
But AJ,
Go ahead,
is that the right way to go? Because there was a lot of criticism on the Fed that they acted too late and now naging 75 bips instead of this gradual thing that they were hoping to achieve. And now you even have some analysts predicting a 50 basis point hike later on is still on the table. Do you think that that might be a better thing to do preemptively, knowing that the inflation is likely to go up?
Yes, I still think that the BSP's current strategy of being more stable and being more predictable is more sustainable on our end. Again, we have a different context. We have different supply chains that we're relying on compared to the United States. Although we're feeling the impact of fuel supply shortages, for example, our food supply is not as feeling the effects as badly. Our rice inflation, for example, was just at 1.5% compared to the overall inflation rate of 5.4%. So on many of the supply chain issues, we're more manageable. But at the same time, we also have to balance the interest of pushing our economy forward, right? So we've experienced positive and significant growth for 4 straight quarters now. But in 2022, that's when we'll know that we've already moved past the pandemic, because we're still feeling the impact of the base effects. So I think there's still a need for us to continue to push our economy towards recovery and to push our economy forward. As mentioned earlier, we're trying to reach middle income status by 2024. So we need to really push our demand still. Of course, as inflation goes higher, we can temper that a little by introducing several interest rate hikes at gradual increases.
Okay, AJ, just to be more direct to the point here, what do you think would be the worst case scenario here for the peso? At what level do you see it weakening? What for you would be the bottom here for the local currency? And what would that mean, especially as elevation scenario remains elevated?
Honestly, I don't think I can give a bottom scenario. Again, it's hard to predict markets at this rate. I think the United States, given their drastic increase in their interest rate hikes, the impact of that is we're going to see some devaluation again, or rather, we're going to see the peso continuing to increase compared to the dollar. But as we also continue to introduce our own rate hikes, then we're probably going to see that stabilize. But there are still a lot of market dynamics involved, and I'm unable to provide you with specific numbers at this time.